Here we have the daily price chart for Tesla Incorporated, stock ticker TSLA. Here we can see that recent price action has been decidedly bullish. We've made some very significant breaks to the top side here, and if we start to pull out to the longer term perspective a bit, we can really see that these how important these recent price moves really have been. As we sort of overcame this bit of a trend line resistance level just above 220, we can really see that this downtrend here that has been in place since, let's get an exact date here, roughly July 20th, 2023, when prices were trading just below $300 per share. This downtrend that's been in place since then, a series of lower highs and lower lows throughout this period, has now been broken. I mean, you could really argue that this is a bit more of a downtrend channel. Really, we can kind of see it there. But at this point, these recent price moves have been decisive, and these downtrend lines have been broken without question. We've seen a daily close above this downtrend line and a weekly close above here as well. So we have not yet seen a monthly close here quite yet. It would take a few more weeks to get there. But I am leaving this downtrend line here that's posted here just so that we can kind of remember, what exactly is going on here. I mean, this is a fairly significant turnaround that we're currently seeing in share prices. We saw massive rallies just out of the 185 level. And there was some resistance that we were pointing to based on an ascending triangle pattern, which came in just below the $200 mark as well. And once we saw a breakthrough there, it was really off to the races. The upside price moves were incredibly decisive and forceful. All of that said, we do need to remember that last week we did see a bit of a crack in the ice here. The Thursday trading session did show some material declines that did send prices through some important support levels. In particular, we can point to the 23.6% Fibonacci retracement of this upward trending move here, this massive price rally, where prices really moved from roughly 138 all the way to 271 quite quickly. I mean, this was a very short period of time here. These lows really came in during the second half of April. And then these price highs, are very recent. We're talking about the July 11 trading session here. So, this is a very short period of time and very strong gains during that time. As that happens, indicator readings can become incredibly overbought. It's not surprising to see this. We're seeing daily indicator readings, relative strength index readings on the daily chart, which is a longer term time frame here. Maybe you could call it medium term, but I would say since most people are really day trading, you're starting to get into long term territory here with the daily chart, and this was still trading near very close to the 90 level in the relative strength index. I mean that is extreme. That's considered to be extremely overbought, the 90 region. And we stayed here for this didn't immediately reverse. We stayed here for more than a week. I mean, that's a long period of time. It was almost 10 days, almost 10 full trading days that we were trading in overbought territory. So recent declines are not surprising, and we do have to keep in mind the fact that these declines were seen throughout the tech space as a whole. Nvidia, Apple, Meta platforms. There were major declines. Microsoft. There were major declines throughout the tech space and throughout the S&P 500. So overall, we shouldn't be too concerned about these price movements lower. But at the same time, we do have to remember that we did lose a few support levels here. This 23.6% Fibonacci retracement level was broken at roughly $240 per share. We didn't close below there, which is a bit of an encouraging sign. But it did kind of open the way now to a potential downside decline here. So what I'm thinking here is that if we do start to see broader declines in the market, during the summer, that kind of thing can happen. The real level that I would be watching to the downside at the moment comes in just above 220. I am pointing to this level for a few different reasons. We've got the 20-day exponential moving average moving into this area. We can see that that's the yellow line here. It also marks the 38.2% Fibonacci retracement of this broader trending move. So since we did break through the 23.6% retracement of this move, sort of the next downside target really comes in just above 220, and it's very interesting to see here that this is also where the 20 period EMA is also resting. Overall, given the bounce back here, I would have to expect that in order to get to this point, we would probably need to see a sell off in broader markets, unless you believe that there is a major top that is currently in place. And if you do believe that, I would like to hear your comment, your post in the comments below, because I would like to hear why people think that Tesla might be experiencing a top here. Overall, I'm not quite there yet. I would need to really see probably a break below 220 before I would start to favor the downside. Currently, what we're seeing here is an indicator reading on the daily chart that is still bullish. I mean, we're rolling out of overbought territory here, and we're close to entering that region again. But the overall trend momentum here remains positive, and this does suggest that prices can continue to move higher. So all of that said, I really wouldn't start to get bearish on the stock yet unless we see a break below 220. That might be a bit of an area of concern if that were to happen. But I would be a buyer. I would absolutely be a buyer into 220. This is looking like a fairly strong level for a number of different reasons, not the least of which is this descending trend line here, which would now be expected to work as support. So you can see all of these three areas are really coming into contact in the same region. This is the type of thing that I try to look for whenever I'm making a trade. I would like to see at least three technical signals kind of overlapping or connecting in kind of the same area. And this does seem to be occurring here at the 220 level. So, in order to get there, we would have to fall roughly $30. And in order for that to happen, I believe that we would probably need to see a sell-off in the broader market. Um, of course, there are some people that are bearish this stock. They probably think that its top is in place now. We're starting to see a major rollover here. You can make that argument. You could say that this is an evening star pattern here, as we can see. We can kind of drill in here. We've got a decisive bullish candle here, followed by a doji candlestick pattern, and then followed by a large red candle. I mean, this would qualify as an evening star chart pattern, and that is a bearish pattern, which suggests that a top would be in place. So there are arguments that can be made here, but given the speed of the reversal from these lows, and the fact that the selling was broad based throughout the market, I do remain bullish on this stock. And this does seem to be supported by the fact that overall trend volumes remain positive here. They remain bullish. So for the most part, buying activity is still outweighing the selling activity. So I'd like to know what you think about the comments below. Where are your price levels for this stock? Do you think that we've seen a major top in place? And what do you think could cause declines here for Tesla Incorporated, stock ticker TSLA?